Hello friends, welcome to my channel. In today's video, we are going to discuss another very interesting and very futuristic sector, which is the renewable energy space. As you know, there are a lot of tailwinds in this sector. In India, the government is giving a lot of importance to renewable energy. Across the globe, every country has their renewable energy targets, and that's why the companies which are working in this space are expected to grow by leaps and bounds. And one of those companies is Sterling and Wilson Solar, which is renamed recently as Sterling and Wilson Renewable Energy. And as you know, there's a major event which has happened recently that Reliance has decided to take over 40% of the stake in this company, which will turn around this company very much. Before we begin, if you're new to the channel, please do subscribe and hit the bell icon, and you can join me or follow me on different social media handles as well. Let's get started. So we'll begin with understanding the sector as such first. We'll do the industry analysis and then jump into the company specific things. So when you talk about a solar plant, it is made up of solar modules. And how are modules made? The raw material for making modules is polysilicon, which is later made into ingots. And those are converted into wafers, which are converted into cells, and then cells are converted into modules. So this is the process through which the solar modules are made, and using these modules the solar panels are made, which are fixed onto the ceilings and the solar EPC projects. So once these modules are ready, along with the other components, these are fixed onto the solar plants. Before the solar plant is made, it is engineered or designed as per the client specifications. So that's called in engineering or design phase. After that, those are constructed, which is into the constructed phase, and then it is tested whether the solar plant is working properly. And then after testing, it is commissioned and it starts working live. After it's live, the companies also provide operating and maintenance support. So this is the entire value chain. And Sterling and Wilson is into engineering, procurement and construction, as well as operating and maintenance of the solar power projects. In India, the capacity was somewhere about 3.7 gigawatts in 2015, which is increased to about 40 gigawatts in 2021. So there have been a massive increase in the past. Operating and maintenance space is also expected to double to $9 billion in 2025 from about $4 billion in 2019. So there's a huge scope in operating and maintenance space, and the interesting fact about this space is that there could be regular revenue of a company who's into operation and maintenance, whereas in engineering, procurement and construction, the revenues depend upon the number of contracts and the size of the contracts which you have bagged in that particular year. In India, our Prime Minister has also decided to increase the capacity in the long term up to 500 gigawatts into the renewable space. Few things to watch in this industry is the raw material prices, the prices of modules, the prices of cells and other components. If they drastically increase and there is no proper escalation clause in the project which you are working, then the company may end up making losses out of the project if the customer doesn't agree to increase the price. And technology is also playing a lot of role in this. People are using drone technology, they are using artificial intelligence and machine language to monitor the various solar projects. They are using robots to clean the solar projects. So these are the trends in this industry. Now, as you know, the solar projects are not capable of producing electricity throughout the day, because in the night there's no sun rays. It's also important to store the energy which is generated properly. So the space of storage or battery manufacturing is also given a lot of importance. There are a lot of developments happening in the storage space where Sterling and Wilson Solar is also actively working. The market size of the battery energy storage systems is also expected to double in the next 4 years due to this reason. Across the globe, US, Australia, Europe are the major markets for this business. The waste to energy market, which is converting the waste into usable power or electricity, is also expected to grow to $2.5 billion by 2027. Now, why are we talking about this market in this presentation is because Sterling and Wilson has now ventured into the waste to energy EPC projects also. In this space, which is waste to energy, there are 70 new projects expected to be established by 2027. So if Sterling is able to bag some orders out of it, they will make a lot of money. In US, the capacities are continuously increasing. From 2010 to 2026, you can see there's a steady increase, and now there are about 30 to 40 gigawatts of capacity is already installed. In Europe also you see a strong upward trend, although there was a decline in the range of 2015 to 17, but now up to 2021 there has been a steady increase, and up to 2025 it is estimated close to about 60 gigawatts of capacity in Europe. In India, what are the factors which are affecting this industry? There are a lot of incentives which the government is giving to this sector, which will boost the players who are operating in this space. There will be a lot of support in terms of infrastructure development by the government. The government may allow these companies to borrow funds at lower cost. Over a period of time, as more people come into cells and modules manufacturing, the cost of cells and modules will go down, which will increase the profit of margins of players in this industry. As technology improves, the efficiency of setting up projects and their maintenance will also improve along with the technology. In terms of capacity additions in India, in 2005 we added about 1.09 gigawatts of capacity. In 2018 we increased to about 9.36 gigawatts of capacity in the year, and in FY20 we added about 6.45 gigawatts of capacity in India. So there have been a constant increase in the additions of renewable energy capacities in India. Now the concern for this industry is the increase of raw material prices and the components. The commodity prices like Indian steel, if you see, it has increased from 45,000 rupees per metric ton to about 72,500 per metric ton in October 2021. The module prices, which is the primary component of the solar industry, increased from 0.190 to about 0.278, so which is almost double. The freight rates from China have increased from about 1800 to about 18,000. So almost 10 times the freight rate have increased to countries like Latin America and Australia. So these are the concerns due to which the companies like Sterling and Wilson Solar are not able to make profits in the recent few quarters. The size of the operating and maintenance market in FY20 was about 218 gigawatts. Out of it, North and South America was about 100 gigawatts, Europe 35, Asia 58, Middle East 10 and Australia 8. The installations of the battery storage systems have steadily increased over a period of time, and they are expected to increase up to 82 gigawatts in FY25. So this is about the size of the industry, the trends in the industry, and the speed at which the renewable energy space installation, operating and maintenance, battery storage system, and the waste to energy segment is growing every year. Now coming to Sterling and Wilson Solar, this company is into setting up of utility scale EPC projects. EPC, as you understood, it is engineering, procurement and construction. And utility scale is when you're setting up a project of minimum 10 megawatts, it's utility scale, which is actually used to supply to different households or industries for the use of electricity. So they are into utility scale solar power projects and floating solar power projects, which is set up on water bodies, into the energy storage systems as well as operating and maintenance. So they cover the entire value chain from setting up till maintenance. So Sterling and Wilson Solar is one of the global leaders in EPC, pure play EPC solar projects. They have a size of about more than 11 gigawatts of solar projects which are done till now, and operating and maintenance is done for more than 8 gigawatts of capacities. And recently, as you know, Reliance have decided to acquire 40% stake in this company and also become one of the promoters of the company. They have more than 3,000 people working with them, and they have presence in more than 25 countries. So it's a global company which have strong presence in countries like US, Europe, Australia, as well as they are venturing into Middle East now. Recently, the company's name was changed from Sterling and Wilson Solar to Sterling and Wilson Renewable Energy Limited. This company was started by the Shapoorji Pallonji Group. Now, to understand the background of this company, we need to also understand the background of the two families working together in this business. So, Shapoorji Pallonji Group, which is the Mistry family, as well as the Daruwala family, are close friends from a lot of years. They work together in the construction as well as the electricals business, because the Mistry family was into construction as well as the Daruwala family was into the electrical setting up and maintenance. So they had synergies in their business. So the earlier generation started working together, and the friendship continues till now. Together they have worked on prestigious projects such as the Taj Mahal Hotel of India. So now if you see in this company also, there is shareholding of the Shapoorji Pallonji family as well as the Daruwala family, is Khurshid Daruwala, who is heading the company as a chairman and non-executive director. So Khurshid Yazdi Daruwala is the chairman and non-executive director. He is a chartered accountant by qualification, and he's a part of this group for more than 25 years, and he's the board member of this company from 2018. The global CEO is Mr. Amit Jain, who joined this company in 2019 as the country head for US and Australia. and he is one of the key players who has developed the Australian business for this company. He has experience in this renewable energy space for more than 29 years, and he has worked with companies in various industries like renewable energy, oil and gas, chemical. He has experience in working with companies like ABB and RPG Transmission Limited. Now let's understand the journey of this company and the key milestones which this company has achieved over several years. In 2011, they started the solar business, and in 2014, they entered into their first international venture, which was in South Africa. In 2015, they were recognized as one of the largest players in this segment in India, and in 2016, they ventured into the rooftop solar systems, as well as they started their operating and maintenance business. In 2017, they demerged their Sterling and Wilson solar business from their parent company to focus independently on this business. In 2018, they became one of the largest players in Middle East and Africa also. And in 2018, they also started the storage solutions business related to the solar projects. In 2019, they commissioned their first floating solar project, and the company got listed on BSE and NSE. And in 2020, they were ranked number 1 in India and second globally as per the Wood Mackenzie's 2020 Global PV Operations and Maintenance Report. So you can see in India as well as globally, they were one of the leaders throughout their business journey. In 2021, their order inflow touched 1.97 gigawatts, and they also took up projects for operating and maintenance worth 8.1 gigawatts. And they opened a new office in Spain to focus on their Europe business. And in 2022, Reliance decided to take 40% stake in this company. Reliance New Energy Solar Limited, which is a subsidiary of Reliance Industries, will take 40% stake in this company. And this will be done in 3 phases. The first phase, this is preferential allotment, which will lead to about 15.46% stake in this company, is already over. In the second phase, Reliance will acquire about 1.84 crores through acquisition, which will be about 9.7% stake in the company from the promoters at about 375 rupees. Once this is done, later they will have an open offer. In open offer, they will try to acquire about 25.9% stake in this company. After all these 3 phases, Reliance will eventually try to get about 40% stake in the company. In case the open offer doesn't work out, then Reliance may choose to take more shares from the promoters if public doesn't submit their shares in the open offer. Present chairman Mr. Khurshid Daluwala will continue as the chairman, and Reliance will also have 2 directors from their group in the board of this company. Now, what are the segments covered in the business of Sterling and Wilson Solar? They do the design of the projects, they do the engineering of the projects, they do the procurement of components required for the project, they do construction of the project. Once the construction is done, they connect this project to the electricity grid for the power transmission. They do the commissioning and starting of the project. They do the testing of the project, as well as they do the maintenance and management of the project once the project is ready and established. So these are the segments in the company, which is utility scale, solar rooftop, floating solar, solar PV storage, operations and maintenance, as well as the new waste to energy business. Now let's talk about everything in detail. In the utility scale projects, this involves the establishment of different solar projects, a minimum capacity of 10 megawatts from design till construction. They also provide storage system, and in another model, which is balance of system model, the company doesn't get into the procurement of the components. The client chooses to procure the components himself. These are the different technical specifications which show the expertise of the company in the utility scale projects. We will not get into much details about it. Then coming to the rooftop solution, as you can understand from the photo, the rooftop solar project is setting up on the roof of any industry or any commercial premises. Until now, the company has already set up close to 70 megawatts of rooftop projects in India. The company has abilities to set up the rooftop projects in the carports, which is like car parkings. They can set up in the sheet metal roofs. They can set up even on the REC roofs. They can specifically set up a ground mounted solar roof project. So like this, there are various types of rooftop projects which the company has the expertise in setting up. Coming to the next segment, which is the solar floating solar project. This is generally established on the water bodies. So wherever in the states or in the countries where there are more water bodies, or the countries which are coastal, can take advantage of this kind of projects where there is no wastage of land for these projects, as well as water bodies are used to generate the renewable energy. In India, world's first solar power airport was constructed, which was the Cochin airport. So in floating solar, the company does the anchoring, project management and planning, module and equipment installation, maintenance. So in this also, the company covers the end-to-end services. The next one coming to is the energy storage area. It's not just important to generate renewable energy, it is important to efficiently store the energy. The company ventured into this business in 2018 and until now it has built about 50 megawatts of energy storage systems. They have in-house expertise in designing the container for storage, and the company has partnered with various battery manufacturers for the energy storage solution providers. So these are the different services which are rendered in the storage area. Now coming to the operating and maintenance. As of now, operating and maintenance contributes only just about 5% of the total revenue of the company, and the company is very keen in growing the share of this revenue. In this, the company has advanced technologies like AI, ML and robotics to maintain the projects efficiently, and until now they have crossed about 8 gigawatts of maintenance capacity. They have 183 sites under them which they are maintaining, and out of which 51% are the third party contracts. Coming to their new business, which is waste to energy business, they ventured into this business recently and they have already secured an order of about 1500 crores in this business. So they have got a client from Europe from which they have secured this order, and the order is to set up a waste to energy plant, right from the designing, engineering till the testing phase. The client is also interested in allotting Sterling and Wilson for the operating and maintenance of this project. These are the different awards which the company has received, which shows the global acceptance of their services and their quality of services. In terms of geographies, as we have discussed, the company has presence in more than 25 countries. Almost all the continents are covered by the company, and they are now looking at diversifying into various other geographies in these countries. Now, after understanding the business of the company, the industry tailwinds, let's talk about the competition in this industry. The company will compete with companies like Tata Power in India. They will also compete with the companies like Wari Group, Adani Group, as well as unlisted players like Vikram Solar. Internationally, the company will compete closely with the Chinese players which have very efficient cost structure, and they will also compete with companies in US like Blackner Energy, Swintron and various other players. Although this industry is not easy to enter, still the company has quite a lot of competition from national as well as international players. What are the competitive strengths of the company? The company is one of the global leaders in this industry. They have strong promoter background and they have efficiently implemented these projects over a period of time, for which gives their customers confidence to rely on this company. They have a team of more than 150 designing and engineering people. They can use the Indian workforce and the Indian base to provide low cost advantage to their customers. In operating and maintenance, they'll use latest technologies like drone, AI, robotics and automatic software management to maintain their clients' projects. With backing of Reliance, now the company will have an additional advantage, as Reliance will have deep pockets, as well as the company wants to invest heavily in building the entire ecosystem of renewable energy in India. So Reliance will be building right from the fuel cell manufacturing till the maintenance of the entire project, so that dependency of India to other countries like China gets removed, as well as capacities in India can be easily built in the renewable energy space. So that will give a lot of advantage to the company. The company has the capacity to bid for huge projects which any other newcomer might not have. The company works on asset-light model and the working capital is also minimal. They also try to keep their fixed overheads minimal, and they often get repeat orders from their existing customers. The company has strong relationships with their clients as well as other suppliers, which is not easy to establish by a newcomer. And the company has become the first company to set up a solar project in Oman. The company is continuously working on newer technologies and also diversifying their business to keep up with their business growth. What is the growth outlook of the company in the near future? The company is trying to maintain their leadership in America, Australia, India, and they have established an office in Spain to grow their Europe business. They will also be focusing on the MENA region, which is Middle East and North African region. The company has plans to establish at least 2 gigawatts of projects in India every year. They will continue to strengthen their relationship with various stakeholders. They will focus and enter into various geographies. They will improve their efficiencies and try to develop projects at lower cost so that they can bag more contracts. Post acquisition, when Reliance establishes their other industries, the company will get products regularly without dependency on the international players at lower cost, which will improve the margins of business. With the green hydrogen revolution, the solar industry, the players in the solar industry are expected to get greater business. So industry wise, short term it looks challenging, but because of the raw material prices hike and inflation, the projects which were supposed to be completed in FY22 are getting pushed to FY23. So there will be short-term challenges, still the inflation persists, but from FY23 onwards, it is expected that the revenues of the company get better. The company wants to focus more on the operating and maintenance business so that they get steady revenue from these kinds of projects. Company also plans to diversify, and in fact it is already diversifying, as you can see from the battery storage system, as well as they have ventured into the waste to energy segment. What are the risks which the company might face in the future? The winning of projects is tender based, and I've found that the company's success rate in getting the tenders is only 14%. So this could be a risk. If they are not able to back the tenders, the company may not be able to get business. There could be inconsistency in revenue which the company is facing right now. Because of the inflation, the clients are preferring to postpone the projects or cancel the projects, which will make the business inconsistent. If the other stakeholders like the subcontractors working with the company have issues, the company might suffer. Recently in this year, one of the subcontractors became bankrupt, which affected the business of the parent company, which is the main company, which is Sterling and Wilson. The customers will have damage clause in their contracts, and if the company is unable to complete the project in time and give it as per the customer specifications, then the company might have to pay damages to the customers. The company is dependent on certain suppliers for their products, and they are also dependent on China for their components. There is a lot of competition risk from players in India as well as globally, as people who are into this business are generally giant business houses. Inflation of component and commodity prices may lead to lower margins or even losses for this company. Geopolitical risk, as the company is working in different geographies across the globe. Industry risk, if the demand in the renewable space goes down, then all the players in the industry might get affected. And the customers sometimes come out with litigations, and the company has to pay for the compensations to these customers, which is also a risk. Currency risk, as the company is into a global business, and cyber security risk, as it is with the other companies also. So now that we have understood the business risk, competition, as well as the growth of the company, let's come to the numbers, starting with the quarterly numbers. Although I feel that companies like Sterling and Wilson or this kind of businesses should be looked on a year-to-year perspective. Revenue in Q2 FY22 was about 1438 crores versus 1300 crores in FY21. EBITDA was negative, which is about 294 crores of loss compared to 4 crores earlier. And profit after tax was a loss of about 285 crores compared to 23 crores in the previous year. Revenue has not been consistently rising. In FY18, the company did a revenue of about 6,872 crores, which increased to 8,240 crores in FY19. But in the last 12 months, if you see, the company has done a revenue of just about 5,300 crores. The unexecuted order value is somewhere around 6,700 crores, out of which 35% is from Australia, 14% from the MENA region, 21% from America, 22% from Europe, 6.2% from India. EBITDA, the company has not been profitable every time at the EBITDA level. It was profitable from FY18 to 20, but in the last 2 years, which is FY21 and as well as TTM, which is trailing 12 months, it has been into losses at the EBITDA level. And the main reason for this losses is the increase in the commodity prices as well as the freight and components prices of the company. Profit after tax, it was profitable in the first 3 years from 18 to 20, but in the last year, which is FY21, as well as in the trailing 12 months, the company is making losses from the profit after tax perspective. EBITDA margin has been somewhere around 8% when the company was doing well, and as of now it is negative. Profit after tax margin was somewhere around 5 to 6% when the company was doing well in FY18 to 20. Share capital has been constant at 16 crores. Reserves have not been steadily growing as the company is unable to make profit every year. Borrowings on a decline, which is good, and the company had issues in the past related to related party transactions, due to which the stock prices came down, as the company had intercompany loans within their group. But now the good thing is that the intercompany loan is repaid, and still the company has a debt to equity ratio of 1.5, which is not very impressive. Trade payables are under control. Fixed assets are not so important for this company, as this company follows an asset light model and they set up the project on behalf of their customer. Trade receivables are somewhere around 1200 crores. We would appreciate more if the company brings down the trade receivables and is able to receive payments faster from its customers. The cash balance is about 428 crores as on September 21 on their balance sheet. Operating cash flows are more or less positive, except in FY19, wherein they had negative operating cash flows, which is not good for any business. Free cash flows have also been positive except in FY19, and this, as the company is making losses, ROCE and ROE is negative. Dividend, the company doesn't pay any dividend, and the auditors of the company are one of the big four, which is BSR and Company LLP. Now let's discuss the shareholding pattern. The promoters hold about 74.1% stake in the company post the acquisition of 15.46% by Reliance New Energy Solar, and the bad thing is out of which about 35.7% is pledged by the earlier promoters. Public holds about 16%, DI is about 3%, and FII is about 6.8% in the company. So we have to keenly watch post Reliance acquisition is completely over, whether the pledge is removed or not. Coming to the valuations, we will not compare the PE ratio in this as the company is making losses. We'll look at the market cap to sales. The last traded price is somewhere around 385, 52-week high and low is about 500 to 184. In the last 1 year, the company has given a return of about 65% to their shareholders. Market cap is somewhere around 7,300 crores. Face value 1 share, it's not face value 10 share. Comparing this with the closest peer in India, which is Tata Power, the market cap to sales of Tata Power recently somewhere around 2x, and the market cap to sales of Sterling and Wilson is somewhere around 1.38. So the valuation doesn't look very pricey, it looks reasonable provided the company is able to sort out the issues in the fundamentals which we have discussed in the earlier slides, and the company makes consistent profits, consistent revenues, a decent profit margin, and continues to grow and maintain a decent growth rate post Reliance acquisition with the support of the promoters. Looking at the price chart, the stock can take good support at the present level, which is somewhere around 375. So if someone wants to invest in this company, then he can look at these levels to begin their investments. So this is about Sterling and Wilson Solar. To conclude, the company had good promoter background, and in fact now with Reliance coming in, the promoter's background has become even stronger. The industry will generate a lot of tailwinds for all the players working in the industry. They'll have a lot of government support, which is good for the industry. The company is diversifying into newer areas, which is waste to energy segment as well as the storage segment. The company has specialization and the capacity to take up big projects, which is not easy for any other company. The company also is into developing latest technologies for commissioning as well as maintenance of the solar power projects. The company follows an asset-light model which doesn't require investments in fixed assets, but fundamentally looking at the financials, until now the journey has not been that great. So the investors have to keenly watch whether the financials improve and the financials are consistently maintained well in the coming quarters or years. With Reliance coming in, people are expecting this company to turn around and become a positive story, but there will be other players like the Tata Group, the Adani Group, the Wari Group in India, which will give strong competition to even Reliance. Valuations wise, they appear to be decent provided the expectations as investors of improving the financials as well as maintaining the growth are done. Overall, it's not a very safe bet. The investment in such companies is highly risky because there is no strong track record of financial success. But with the new player, which is Reliance, coming in as a promoter with 40% stake, there can be expectations that this company turns around and becomes a decent player in the renewable energy space in India as well as globally. So depending on your risk appetite, depending on your understanding of the industry, depending on your satisfaction of the company's past growth as well as future projections, you need to take a very wise decision to invest or not in the company. From analysis perspective, I've shared all the insights with you. Now it's up to you to take a decision whether to invest in the company or not. So this is about Sterling and Wilson Solar and the renewable energy space. If you like the video, hit the like button and subscribe to the channel and get in touch with me on different social media handles as well. If you want me to analyze your favorite companies, please don't forget to leave the name of the company in the comments below. I will consider them for the upcoming videos. Thank you for watching this video and have a wonderful day.